Hi everyone, welcome back to another Sunday stock scan. This week we're going to be looking at some indices. We've got some trade setups, long and short, and we'll just kind of give a general overview on the market as we see it this week. So we'll jump straight into the S&P as usual. So on the daily time frame at the moment, we can see that the bullish divergence that we spoke about last week on the MACD played out, and we had a nice run up from the previous Thursday into the end of last week. Friday was a big green day. What I'm seeing at the moment, obviously we've got, with the high here, a low, a lower high, a lower low. So for me at the moment, I would need to be seeing this high here being broken before the bearish market structure is broken. If we were to break this level, then we're looking at liquidity here, potentially looking at this gap up here. So these are the kind of important levels we're watching at the moment. So, we could be seeing something like a break here. Even if we just get a pierce through and come back down, then we could look to start moving up. That would be the kind of bearish scenario that we'd be looking for. Obviously, going forward long term, I'm still sticking to what I said last week. I'm still looking for this high before the COVID crash to get traded before looking for any major long positions. If we go out onto the weekly chart, we can see that we're starting to get some kind of bearish divergence developing on the MACD. Obviously, it's not confirmed yet, but we can see that it is developing. So yeah, need to keep an eye on that going forward. We can also note that we've got this supply line here coming down from the highs. So, it could be possible that we could see, let me just delete that, go back onto the daily chart. We could see this line being tested. So we need to see how the earnings go for the major US stocks before we can position ourselves accordingly. Moving on, we've got the Nasdaq. Obviously, last week we spoke about this descending channel with the bullish divergence on the MACD. We got the break of this channel, sustained break. So I will be looking for a move up, at least to this 0.5 Fibonacci retracement line. This is making me think that there's potential for longs and tech stocks in the next week or two. So I'll have a look out for that. Moving on, quickly need to mention gold. Gold has at the moment got triple bullish divergence developing on the MACD. We've also got this double bottom. Last week I spoke about the gold indexes and how they were approaching a potential double bottom formation. Obviously, if this was to break, then there's not much in the way of support until you reach the COVID lows. So quite a considerable drop from here. But we've seen a big reaction on Friday off of this level. So now we need to see if this move is going to be sustained. I'd be looking for this level here to be broken to the upside before I would position myself accordingly. Something similar to this, where when we get a test, rejection, break, and then we flip this zone, this resistance zone into support, and then we continue to the upside. I did have a quick look at the gold miners, but technically there was nothing there that was catching my eyes, which makes me a little bit wary and thinking about positioning myself in gold at the moment. But I will be keeping an eye on this chart just to see how it reacts if and when it reaches this level. So now we'll move into the potential trade setups that I found this week. The first one, sort of the best one I think I've got, is the ARK Innovation Fund. I've had a lot of fun shorting this over the past couple of weeks, or past couple of months rather. But right now on a daily chart, we've got a prime fallen wedge with divergence setup. This is like my bread and butter go-to favourite setup for a trade. You see we've got this level here, which was support. Support here, came down, bit of a fake out, back up, back down. So now we're kind of finding support at this level. we've got the confirmed triple divergence. So taking a trade and this sort of thing would be really easy to manage your risk. What I'd be doing is I'd be looking for my stop loss to be below the most recent low. I'd then be taking the Fibonacci retracement from the top of the wedge to the very bottom, and we're looking at our levels. Right, okay, we've got the 0.382, which sort of lines up with this resistance here, and then we've got the 0.618, which is this kind of level here. So I'd be maybe thinking target 1 would be your 0.382, and I'd maybe enter another trade and I'd target that point just below that 0.618. So yeah, I don't know why that's not updating the risk to reward ratio. Oh, sorry, if I move my stop loss up, it will. Yeah, so that'd be your 3-to-1 risk to reward ratio trade, targeting just under the 618. I think depending on how this price action develops in the start of next week, I will be looking to enter a trade in ARK Innovation. Just to add a bit of confluence to that, the SARK, which is the Short Innovation Fund, which is essentially an inverse fund which tracks the inverse of the ARK Innovation ETF, has got this rising channel with triple confirmed bearish divergence. It's pretty much the exact same as the ARK chart, except it's a channel rather than a wedge. So that's all this kind of shows me, is it's confirming to me that there's a high chance of a move to the upside in the ARK chart. Moving on, this another one, Advanced Micro Devices. This is a semiconductor stock. What we're going to do is I'm going to show you this from the weekly chart, and then we'll move our way down to the daily. So if I just go full chart, I'll take off these trend lines at the moment. I'll take off this fib level. So first thing I want to show is, on the weekly, if we go and we get the fixed ranged volume profile from the COVID low to all-time high, we've got this massive volume shelf at 82, and then the point of control at 53, 54. What the point of control shows is this price level is where the most volume has been traded. So when this stock was moving up after the COVID crash, when we got to this 53 level, this is where the buyers really stepped in. The price moved up. We got another big bout of buyers stepping in at the 83 level, eventually moving us up to all-time high. So now when we come down, this is where we're going to be looking for the buyers to step back in. You're going to be getting a lot of people coming down. They maybe bought in here and they're looking to add to positions, or new buyers looking to step in. So usually we see big reactions on these volume shelves. So I have it highlighted here to show that's where the volume shelf is. If I just turn on the MACD quickly as well, you can see, delete this, you can see that we've got a bullish divergence developing. If this level can hold here and we start to see this curling, then that's adding confluence to a bullish thesis at the moment. If we go down into the daily time frame, I'll take away this line at the moment, and we'll take away the MACD just for just now. We can see, first of all, the price is making a nice little base on this volume shelf here, so it's finding a bit of support. We can take a trend line and we can show that there's a demand line here, and we can show that there is a supply line here as well. So, you know, depending on how you want to draw this, you can draw it like this. It's almost like a kind of descending channel / wedge, but price is certainly moving within this at the moment. It's making a bit of support here. And if we take our Fibonacci retracement from this low to this high, you can see that the support is around the 1.414 Fibonacci retracement level, which is a pretty important level. Also, on the MACD, we can see we've got a confirmed bullish divergence, which is yet to play out. So this is another one, another good trade idea where you can manage your risk really, really well. You know, you're close to the lows, so a clean out of these lows would invalidate any bullish thesis you might possibly have. Taking the Fibonacci retracement from the top to the bottom, we can see where our levels are. 0.382 is tying in quite well with our support level. So this could be your first target. 2.4 risk to reward ratio trade isn't too bad. And then maybe a second target level could be the 0.618 again, similar to ARC Innovation. So depending on price action the start of this week coming, these could be some potential trades to enter. Next up, JMIA. Now, I've got to be honest, I don't know a single thing about this stock. I don't know what they do. I don't know where they're from. All I do know is, if we zoom out to the weekly chart, turn off the MACD fall now, we've got major support level here, major support level here, support, and we're back down at this level. It's a bit clearer on the daily. You can see the support here, and the support here. So we've found our way back to this level, and if we turn on the MACD, you can see that the daily MACD is curling, about to confirm bullish, but the 4-hour chart is what we're interested in. We've got this nice falling wedge pattern, and we've got triple confirmed bullish divergence. Again, this is the kind of bread and butter trade I like to go for. Very, very easy to manage your risk. If we were to enter here, we'd have a very tight stop loss below the recent lows. And then really, we'd be taking the fib retracement from top to the bottom, as we did with other wedges. And these would be the targets that I would be going for. 0.382 fib level would give us a 5.26 risk to reward ratio trade. This is massive, guys. Basically what this means is, if you were to risk the same amount on every trade you take, for example, I would normally risk 2% per trade. So if I'm risking 2% on this trade, if my target was to be hit, I would be making 10% of my portfolio on one trade. If I was to lose this trade, but I could essentially lose 5 of these trades, and one win would cancel out that loss. So that's what's super important to manage your risk. Super important to be finding prime entry points like this where you're able to manage your risk really effectively. So yeah, that's GMIA and another trade idea for the coming week. Nextly, what a wee special mention for this stock that I came across, Stone Co Limited. If I zoom out into the weekly, I'll turn off the MACD for now. So you can see this stock has been absolutely battered from its all-time high. I'm guessing it IPO'd at about 32, came down, found support at 17, run up to 47. So what's that? A nice big run up. Nice big 180% run up. Price came back down, almost made a double bottom at the kind of 17 level, 17.89, and from there had an absolute monstrous run to 95. So a 450% run. If you bought in at the COVID lows in this one and you held to all-time highs, you would have made an absolute fortune in less than a year. Crazy to think that those kind of gains were getting made back then. However, if you were to buy in at the top and were to be still holding at the moment, you would be down a grand total of 88% on your position, which is just bonkers. It's a lot of money to be down. However, now what we can see is we've got an ascending triangle formation forming on the bottom here. If we zoom into the daily, you can see it a bit clearer. So we've got this rising demand line with the horizontal resistance. What this is basically showing is the price is coming up, it's finding resistance, it's coming back down, and every time it goes up to the resistance, it's getting weaker and weaker, and more buyers are stepping in. What we've also got is, if we turn on the 100 and the 200 exponential moving averages and the 200 moving average, we're about to get a bullish crossover. So the moving averages normally show you the direction of a trend, and the shorter period moving averages are obviously quicker to react than the longer period. So in a bullish trend, you want to see the shorter period moving averages above the longer period, and in a bearish trend, you want to see the opposite. So if we get a crossover here, that would indicate that we are having a potential change in trend. Now, another thing to note about this stock is Warren Buffett and Berkshire Hathaway actually have a $110 million stake in this company. So, if you're interested in getting invested in companies and you see that there's a monster like Berkshire Hathaway behind it, it's only going to add confidence to your position. So for me, I like to have some sort of MACD divergence before entering positions. However, we're not getting that at the moment. But what I do think is this has good potential for a long-term holding. So I'll be looking at maybe adding some of this to my long-term portfolio in the next week or two. Right, finally, we've got ISEE, Iveric Bio. Now, if anyone follows me on Twitter, you would have seen that I had a nice Balfour Beta short just last week that we closed out on for a 3-to-1 risk to reward profit trade. This is a very, very, very similar setup. It's a kind of scuffed rising wedge pattern with confirmed daily divergence, and we've got this gap up. Now, this gap up's really low. On the Balfour Beta chart, the gap up was pretty high. So, if we were to target this gap close, then we're looking at, if we were to take a short here with the stop loss just above the most recent high, and we were to target a fill of this gap, we're looking at an 8 risk to reward ratio trade. That's massive. We could even give ourselves some leeway on the stop loss and make it a 7. We can make it a 7 RR trade. Sorry about that, guys. I'll just bring that back down to the gap close, and I'll bring this down to there. So a perfect short setup with exactly what we're looking for. The confirmed bearish divergence, nice pattern, and a gap to fill. So that's pretty much the main things that I found this week. To find, what's that? 1, 2, 3, 4, 5. To find these nine points of topic, I had to go through over 300 stocks. So it does take a lot of effort to find the prime setups, but in the long term, it's worth it. You don't want to be entering any old garbage just to be in a trade. You want to be having the confidence that the positions you're taking are going to be returning the profit you're after. So, yeah, thanks for watching, guys. If you enjoyed, please be sure to subscribe. Drop me a follow on Twitter at ScottCharts. I post daily market updates, daily chart updates, similar to the channel, but a lot more regular. So thanks again, guys, and I'll speak to you all next week.